banking to date as a market-led infrastructure, regardless of where CFPB takes in or does not take in, the movement is here. It is driving infrastructures and it is helping improve people's lives. So I'd love to kick off with our first panel that I'll be moderating. If I can invite all of my speakers to please come to the stage. I'll introduce all of you, but I'd love for each of you to just share a little bit about yourselves as well. So you guys can give them a round of applause as they come up to the front of the stage. So I'm really honored to be the moderator for this session, as I know each of them personally, and I think this is going to be a really exciting discussion. When we're thinking about open finance, and what does that really unlock from a connected financial ecosystem? We have such a great panel because we are really going to come at this from many different angles. First, we have Jane Barrett. She is the Chief Advocacy Officer for MX, so been on many panels with her and excited for this discussion. We also have Adam Hark, who is the Managing Director of Wellesley Hill Financial, which is a Boston investment bank. So excited to have that angle. We also have Max. He's the head of product from from YASPA. YASPA is actually just coming in from the UK, and they actually work in 19 countries in Europe, focused on open banking and regulated iGaming payments through digital identity. So great to have you here from that perspective as well. And then we also have Ruben, who is the co-founder of Quilt, and Quilt is also an aggregator. So we're going to have quite a lovely discussion today, but I'd love each of you to just share a little bit about why you're so passionate about open finance and a little bit about your role. And I'm going to come starting with Jane.
Thank you, Michelle, and it's wonderful to be here. A little first about MX, because then it makes sense why I'm passionate, but we work with mostly banks and credit unions and basically turn data into action. So we have a whole suite of software services, white label mobile apps, digital money management tools. We do data enhancement. We turn machine-readable data into human-readable data, but all of that takes a flow of data. So we have invested heavily in the open banking ecosystem for a little last decade or so, and really do truly believe that to empower the world to be financially strong, which is our mission, people need to be able to access, share, and enable outcomes through data. I personally care for a couple of different reasons. I'm also the co-chair of the Financial Data Exchange, which has been an industry effort over the last 7 or 8 years to really bring the whole industry together to enable that healthy flow of data through interoperable standard. But the fun fact I don't usually share is I started my career in data, except on the marketing side of the world. And given that data has usually just been used to sell people more crap, like that is the primary use case, it's kind of great to be on the other side of it, which is how can you use someone's data to help them improve their outcomes.
I love that empowerment aspect. Thank you, Jane, for sharing. Sorry, guys, we have to share mics today. Over to you, Adam.
We noticed, yes. My name is Adam Hark. I am managing member of Wellesley Hills Financial and Wellesley Hills Securities and Investment Bank based in Boston. We exclusively work in the financial technology and payments technology space. I'm probably the odd person out on the panel. I bring a different perspective. I'm not in the open banking / data aggregation space. But I think that gives me a unique perspective. I don't approach this topic, I wouldn't say passionately, I would actually say dispassionately. And I think that gives me the advantage of being a little bit more objective on how I evaluate it. I am an exponent of open banking and open data, and primarily because of its utility. I have the luxury of observing, assessing, evaluating the technology, not just as a banker, but as a consumer as well. And as a user, the technology is better. It has opened up so much, a tremendous amount of access to people who otherwise would not have had it to traditional financial services. And I don't think there's any denying that, the genie's out of the bottle. It's not going back. We're only going forward with this.
Yeah, I really appreciate giving that perspective. Over to you, Max.
Yeah, hi. So you'll probably be able to detect the British accent in me, but hopefully as part of this panel I'll be able to bring a a unique perspective in the sense that I've had a varied career in open finance on the continent of Europe. So I started my career as NatWest Group, where I led the product development for their open banking payment solution. And that was on the back of responding to the government mandate in the UK, which was effectively the 9 largest institutions in the UK had to give away and enable to third parties access to their data attributes. So account name, account details, transactions. Very much in a similar way to what's been enabled with or proposed to be enabled with 1033. So I responded to that back in 2017 as part of the mandate and the API enablement. And then the last couple of years, I've moved to the other side of the coin, where I now work as part of our product development team at Jasper. And we've been looking at how we utilize open finance in the UK and Europe to build new ways of managing transaction data and using AI to create insights for the iGaming industry for the purposes of providing player protection and sustainable gambling practice in Europe. And I think my interest really in the US market is that in the last couple of months we secured a Series A investment from a fund in the US, and we're looking to bring some of our proprietary technology to the US. So the folks of you in the room that are based out of Atlanta, we're going to set up shop in Atlanta out of Colony Square, and we'll be looking to bring some of this capability to the US over the coming years.
Thank you, Max. I really appreciate thinking of iGaming and open banking. I'm excited to dive into that a little bit. Ruben, over to you.
Hi, everybody. I'm Ruben Zmalian, co-founder and CEO at Quilt. We are a unified API for open banking. Essentially, we let folks access best-in-class aggregators, enrichment providers, payment processors through a single integration, and in most cases, a single contract. I got into this space primarily because I decided to quit my well-paying, stable job to start a budgeting app, what feels like many years ago. Ran into a ton of problems trying to stand up, one of the, industry-leading aggregators today, and kind of realized that the technical and commercial barriers were surely freezing out a lot of people. And that's kind of how we started working on Quilt. The idea behind the business really is to dramatically bring down technical and commercial barriers for folks building on open banking data and hopefully unlock a lot of really new, exciting use cases.
Very much appreciate that. This is going to be a very fun panel. Just to introduce myself again. So Michelle Bayo, CEO and founder of Finnovator. I started Finnovator because I actually launched WeChat in North America in 2017. And when I launched the QR payment infrastructure at a test pilot in 7-Eleven, in Vancouver, my eyes opened to the future of finance was living elsewhere. I was in Asia far ahead of what we were doing in North America, and I became passionate about open finance, really learning what was happening in the UK in the sense of what happened after 2008, bad behavior in the UK, bad behavior in the US, kind of created this challenge within the ecosystem, and open banking was born in 2017 in the UK as a forced action on the CMA9, which was their 9 biggest banks, to force them into open banking, which was really a future-proofing exercise, meaning that those banks then had to have data in and data out and aggregated. The data was able to have a pipe, a safe, secure pipe to get the million consumers away from screen scraping, which was happening. When it hit 1 million screen scrapers in the UK, they got nervous. 9 million people are screen scraping in Canada and the US. There's a lot of data aggregation through safe pipes, but there's also still a lot of screen scraping occurring. And what open banking is meant to be, and open finance, is an API consent-driven mechanism to ensure the consumer is a part of this transaction and allowing them to be at the control of this movement so that they can use their data to empower themselves. So to me, I see open banking, open finance as a human data right. Australia is actually the first to have a consumer data right across everything from open banking to open finance to open energy to open telco and eventually open data. But it brings me to my first question, because we can't not address the hot topic or the big elephant in the room. Last month, 1033 has had its challenges, though 100 million people use open banking today. when 1033 was set out and we were meant to get to an April 1st open banking regime in 2026, there's some challenges, let's say, in what's currently happening in 1033 in the CFPB. But I think the biggest news that has come out is some banks are talking about potentially charging for data access. And that's really my first question. Is that going to hurt the consumer? Is that going to hurt competition? And I'd love to kind of start with you, Ruben.
Sure. Obviously, there's been a lot of chatter about this subject. My WhatsApp groups, all the fintech people are continuing to blow up about it endlessly. I think for me, we tend to focus on the consumer use cases, which is what the CFPB was really after, primarily based on its mandate. I think from my point of view, one of the things that I would personally love to see if we are moving to a world where banks are starting to charge for data. JP Morgan is one of the FIs that's been kind of talking about the costs of open banking on their systems. One of the things I'd love to see for my customers is if these fees actually go into investments for those places where connectivity is very poor, right? So we talk about consumer data. We've made a lot of progress on consumer data, but B2B data, for example, we have about a dozen bookkeeping automation customers that are having a really hard time connecting to major institutions to be able to automate, the books. And to me, that's one of the most high value use cases of this kind of AI revolution that we're living in, is automating all these manual processes for businesses. I'm trying to look at it from a more optimistic perspective. If we have a structure where some of these fees actually do, as some of the banks claim, go into investments into systems, and we start to see better connectivity on the subset of connections that were not really covered by a lot of these OAuth APIs that we've seen market-driven over the last decade or so. I think that will be a net positive for customers of these businesses. And part of that also is a function of, when you talk about B2B data, the business model is a little bit funky, because most aggregators today will charge for B2B connections using the same kind of methodology as they charge for consumer connections. But somebody who is doing bookkeeping for a major corporation and needs to connect their accounts to get data, that one connection is worth way more than 50 cents or 70 cents a month of transaction data that we're actually seeing. So I think the B2B use case, to me, could certainly sustain fees, but I'll let other folks talk more about the consumer use case.
Yeah, Max, can you give us kind of your thoughts in the sense of you guys being in 19 countries in Europe as well as the UK? Like, how do you see this potentially helping or hurting?
Yeah, so Jasper's been going for around 7 years, but I always say to my boss, it only got going when I joined 2 years ago. And the reason I say that was we had kind of a hockey stick growth as we started to expand into different territories in Europe. And we did that through partnering with aggregators like Quilt, like MX in Europe. So we partner with a firm there called Yapily. And they effectively, as Michelle said before, they provide the pipe. So their role as a much larger entity than we were at the time was to provide the infrastructure, ways for us as a fintech to try and build and establish a USP of our own. So one of the observations I would have as a new entrant trying to kind of make my way here as a pay-by-bank offering in the US is that access in Europe is relatively cheap. So the same data attributes that we need here in the US to deliver our product and service that we have in Europe is already more expensive by a magnitude of 5 in the US. So the concern I would have as a new, and again, we're going to be a small and scrappy fintech here in the US, would be that these proposed changes to costings, if that trickles down to fintechs, is potentially going to mean that there are even higher barriers to entry for smaller companies looking to use open finance as a way to create new innovative capability and solutions that perhaps not necessarily as exciting as some of the early open finance adoption that's taken place in the US and was also the kind of first mover in the UK in the lending space. And really, us as a fintech, we managed to find a very niche USP in focusing on a new data set, being transaction data, and using machine learning techniques to help both the national governments of the Netherlands and the UK develop policies around player protection and sustainable gambling. And I think what potentially is at risk here in the US is other fintechs with niche ideas and innovative approaches are potentially going to be blocked from being able to access the market going forward.
Yeah, appreciate that thought, and even the fact that it's 5x before there's any changes. So international companies coming to the US already have a cost X that's higher. Adam, any thoughts from outside of the inner workings of our feelings?
Yes, yeah. From my perspective, to concisely answer your question, I think the consumer always wins in the long run. And I think what is happening or what's playing out now is that the ecosystem participants, the stakeholders, it's very fluid, and they're dancing, and they're trying to figure out the economic model that will work here in the United States. There's been mentioned before, I don't know if it was on the panel or even earlier at lunch, about, Australia did it this way, the UK did it this way. Those were top-down implementations of open banking. In the US market, we're market-driven. It's demand pull. It's a different system. So the businesses, the stakeholders are going to have to react to the market participants, ultimately the end users, what they want, what they need, what they like, before they kind of settle into an economic system that works. And I don't think what's happening now with JP Morgan is out of the ordinary. I think it's part of the normal course, the evolution of the free marketplace as a new technology enters it.
Yeah, no, I appreciate the discussion, because I think when I look at this ecosystem, I see my cell phone number as my identity and my 7 digits, and that was mandated to allow me to move telcos so that they didn't own me. I feel like that same mandate is needed for my bank account information, not for the enhancements of an API of the bank giving added layer of insights, which should have a charge, I agree. But my baseline access, I believe, is my identity, and should be free to access so that I can move around, just like my cell phone number if we're using an example set. But I know everyone else has different feelings about it. But I do think if the bank's doing something extraordinary or different or beyond and using their intelligence, I think that there should be a charge and there should be allowed to charge. But I think baseline for me, my opinion, is that there's something there that is part of my identity that I'm trying to protect. And we'll see how that all pans out in the US. But when I think of use cases, I'm so excited about so many different aspects of what open finance is enabling around the world for consumers and for businesses. And when I think of how that's giving personalization, especially now with AI, I'd love, Jane, if you could just share some thoughts of your favorite use case when it comes to open finance.
So mine is going to sound very vanilla, but it's still not there yet. The average American has 5 to 7 accounts. Can I see them in one place? Like, you can't. It's impossible. So I'm saying it's my aspirational favorite, so we can collectively, anyone who has a slightly more complicated financial life, actually get a sense of where you are at a moment in time. Like, basically, you want a treasurer for your household, right? You want treasury services, which looks at cash flow, it looks at your debt, it looks at your cost of borrowing. All of these things are possible through AI, but we just can't get to all the data yet. So I think it's, again, I'm sure others will have more aspirational out there, but I think it's kind of insane that in 2025, we still can't get a 360-degree view of our money.
I don't disagree. I think having a dashboard, because so many people are micro-banking today, where they have different relationships everywhere for different reasons, but no visibility on an overarching. And that's not just personal business. That's like business accounts as well, right? I'd love, Ruben, if you wanted to layer on to your thoughts on that.
Well, we have a lot of kind of PFM and business PFM type use cases that folks come to us, and one of the things that's always fun is just they want to kind of learn about best practices and how to think about it. But I second Jane's point that we're still pretty far from, you know, a company being able to offer most of their consumers the ability to connect all or most of their accounts, right? And part of that is, you know, related to some of the subjects we're talking about with Rule 1033 that was trying to standardize access, a lot of the work that, you know, Jane and team are working at FDX to try to create common standards. So to me, that's something that I'm hoping continues to improve. But you know, we're pretty far away from there. I think we are seeing a lot of interesting AI use cases, primarily around new interfaces. My favorite fintech app like 7 years ago was a thing called Penny App, which was a chat bot, and it was like rules-based. We're now seeing folks start building these type of things with modern LLMs, and some of them are really, really impressive. But again, until we have all of the data on somebody's financial picture, it's very hard to have these generally non-deterministic systems not hallucinate about very basic facts about your money, which erodes trust, and kind of we're back to square one.
Yeah, no, I find it's difficult when you're thinking about how do you have a holistic view of what you're facilitating and what's the cheapest, best credit card. How do you take care of elderly parents? I know that there's some use cases in the UK that are really interesting. Maybe Max, you can share.
Yeah, so part of our policy work with the government in the UK has been, as I mentioned before, to look at helping to predict gambling risk around people developing addiction and experiencing financial harm. But also the FCA, so that's our kind of financial regulator back home in the UK. There is research that they're doing in partnership with the University of Warwick, which is looking at the opportunity to take transaction data and understand when people are starting to develop late-stage dementia, so that banks in the UK can use that same approach of predictive risk around how people start to spend as they regress in their later years, so that banks can start to intervene much earlier before people make poor spending decisions that they might not have otherwise done. And I think it's important to be aware of some of these wider kind of opportunities of open finance and the access that transaction data provides, because there's a whole host of things out there in the real world that could be solved by that level of access with the right tools and AI techniques to help people make better decisions.
Yeah, it's pretty powerful when you think about it in that way. Adam, do you want to layer in one last example?
Sure. And this is, I'm wearing my consumer hat here, and this is aspirational, similar to Jane's. What I'm looking forward to, what I'm most excited about on a personal level is request for payment and virtual recurring payments. As someone who has far too many credit cards, and I think about, you know, if I was to do an audit on myself and all my credit card statements, and God knows how many things I'm being charged for every month that I have no idea that I'm being charged for. The level of control that open banking gives you, that permission access piece, being able to control ticket size and who the vendor is and periodicity of payments, and putting a timer that automatically you would have to review this in 12 months or 18 months, to me is incredibly powerful. It's an incredible tool, and I think it goes basically to the foundational argument of why this technology is not going anywhere and is going to be a permanent part of financial services, is because it offers real utility to both consumers and SMBs.
I love how you brought up that example, and that's largely because when I think of myself, my email, and like an old email that you have that gathers all of your subscriptions, I use a very old one, I won't mention it, but they did come up with something innovative, and they actually gave me a dashboard that told me all of my subscriptions for all of my emails, and I was able to toggle them off, and it would delete every email that that person had ever sent me. And I think that's where we need to get to, from a consent-driven dashboard of my data, not just for subscriptions, but where is my financial data and how do I toggle that off when I no longer, and delete it all the way backwards so that I have this kind of freedom over my data. I know we want to get to questions, but I have a couple more for the panel, and I will come to you. Jane, I really wanted to dig deep. I'm also the president of the Open Finance Network in Canada. and we did a report on who was the biggest winner in an open finance ecosystem, and we found that SMEs are a huge winner when it comes to open finance because it can help reduce the cost of their interest. It can help save them time, give them visibility. This is where you came from your fintech days. Can you share a little bit about why it matters for SMEs?
Who in here owns a business? It's a pain in the butt, right? How is it still so hard? And it sounds like a throwaway when you say, oh, it can save you time and make you more efficient. You open a bakery to bake. You don't open a bakery to do QuickBooks 6 hours a day, right? So I think, again, this is super basic, but if we can enable business owners to actually focus on the area that they've chosen to build a business in, and second, like actually enable the financial services ecosystem should work for the baker, not the other way around. Right now, the baker spends their damn time navigating us, and that's just sad. So I think that if we get to that point where data can be used through a variety of tools that are automated, that are predictive, that are getting best-in-class tools that can do real-time switching or unsubscribe or whatever it is, like the more you can get that baker baking, that is the vision of all of this.
I love that point because I think we figured out that something like 8 to 10 hours of accounting every month that could be saved by having some type of API to the data infrastructure versus screen scraping that breaks pretty much every month, meaning you have to reconnect your infrastructure on QuickBooks. I know, Ruben, you were mentioning this as well, like the one use case that's really hard to facilitate is SMEs. What are we missing? Because I know some banks hold their consumer data separate from their SME data, so they're just not maybe allowing it to aggregate as easily.
Yeah, I mean, I think I don't have the numbers off the top of my head, but I think most of us know how concentrated consumer banking is, right? Some of the top 5 banks, hold something like half of American deposits. My understanding is in B2B, that's not the case, right? You have a lot more smaller institutions, a lot of regional banks, a lot of community banks that are banking folks. It's much more relationship driven, much more so than I think consumer banking has become when we're used to the relationships with our phone. With smaller businesses, it's often a relationship with another human being at a branch. And so there's more loyalty to the smaller banks. And then when it comes to the actual data, I think when you look at some of the larger FIs, they have integrated these systems. But when you look at many of the business banks, there's so many bolt-on acquisitions that, when a customer tries to link up an account, through an aggregator, you see duplicates, you see, a dozen FIs that look the same. You keep trying each one. It's almost always screen scraped, right? So this move towards OAuth and API-based connectivity that we talk about, that the CFPB was trying to bake in, was again, it was consumer driven. That was the mandate. And so for business data, we see some institutions that will piggyback off of those investments and expose sort of the business data as part of those same rails, but that's a minority, right? And so, to me, that's one of the reasons I was excited about, or not excited about, but at least I'm looking at the silver lining of this charge for data. Look, if you're going to charge for data and actually make those investments, that could be really interesting. I'm skeptical that that's the true rationale here, but yeah. It is I spent about 8 to 10 hours this week doing support tickets for B2B account linking, right? So it adds up a lot of friction for, all really members of the ecosystem today.
Yeah, no, I think it's good to highlight these challenges because it's not always spoken about when we talk about consumer. SME is assumed, but SME sometimes needs different infrastructure. And SMEs in Brazil, in the report that we looked at, had 2% cheaper interest rates on their loans because they had better data in Brazil from open finance. And credit unions' deposits went up by 17% because there was just better access. So there's a lot of wins. This could be where the GDP growth comes from. I just wish we looked at this from a GDP growth versus a tech initiative or a future-proofing exercise. I wanted to get your quick question, and then I have one last one for the audience. If you could say it really loud, I don't have a mic.
Quick question around open banking and the merits of being a catalyst for financial inclusion for minority communities and also the unbanked, underbanked, and people who are traditionally out of the banking system. Do you see open banking as a way to bring more people into the banking system, or is it still going, kind of that dynamic?
Yeah, I can get one of you to answer. Yeah.
I mean, the answer is yes. Again, that sort of very diminutive, thin file consumer. Just because someone hasn't been actively lending from the system doesn't mean that they're not good payers. It doesn't mean that they don't have good income streams. So I think at the very least, getting access to cash flow data, being able to see running balances is a very non-credit bureau way to bring people into both lending and sort of higher interest deposit accounts. It has been, as you know, there's been many, many initiatives around financial inclusion. Have we had a really firm view into cash flow underwriting? Not yet. Not at scale. So the data is there, the tools are there, bringing in more people to, and maybe the unbanked don't want to be banked. There is also that. But there's way more tools that people can use that can lower the cost of borrowing and get more interest back and get them started investing.
I love that. Thank you for bringing that up. We only have 2 minutes left, so we're going to do Spitfire for the last question. We have a diverse audience here. I'd love for each of you to just share quickly in a couple words, what should everyone in this room kind of focus on to move their company to enable or touch open finance in some way, shape, or form for their consumers, their business? And Ruben, if we go down quickly down this line.
Sure. I think it's kind of keep your eyes open and try to stay sane. Just in the last few months, I mean, we've seen so much seesawing between what the regulators are doing, what the regulators are not doing, what side they're on in each issue, right? And some of this is a function of the kind of political environment, but I think a lot of it is also a function of just how dynamically this industry moves. For finance, which is known to move slowly, we seem to be moving pretty quickly. Incentives are changing, and so I think for folks kind of in this room, as you're looking at how this affects your business, is frankly just keep an open mind, make sure that you're evaluating new solutions, new ways of doing things. Whatever works today is probably going to work differently in 6 months ago, certainly in 2 years.
So I'll answer this one for the fintechs in the room. And the reason I want to do that is we're going through a moment in the UK where every month now there's an open banking company going bust. And that's effectively because they haven't been able to differentiate themselves from their competitors. So the only reason that Jasper has effectively been able to be successful over the last couple of years is really defining quite a niche USP for our business that gave us credibility, gave us traction, enabled us to work with national governments in developing open finance policy. So if you are interested in open finance, there's a whole host of opportunity here, but really make sure as part of your strategy, there's a clear, distinct, unique selling point for your business.
Yeah, great point. Adam?
For me, it is, thinking about the ecosystem participants, I think the biggest issue that they need to be mindful of on the horizon is uncertainty. And that is a big problem for any type of business. And the way things are shaking out right now, unless the CFPB really threads the needle here on this next rewrite, that BPI lawsuit is going, I think, my own opinion, is going to be a problem. And it wouldn't surprise me if that starts to track and escalates into, moves through the court system. Which is going to take up a lot of time. So for people who are in the space, especially for the data aggregators and the fintechs, you want to make sure that you have the proper resources to hunker down for a little bit while this plays out.
Last, Jane, and we only have
Thank you.
a couple seconds.
I'm an accidental policy person. As a fintech founder, I had to be SEC FINRA registered. So I'd come into the policy world by arguing with regulators around, I'm actually a data business, not an investment business. I was wrong. But it was, I think, policy folk, regulators, they want to hear from practitioners. As much as there's government affairs folk and lobbyists out there, they actually want to hear from people building. So don't feel like that you can't have a voice, because it's actually an incredibly powerful voice when Adam from Jasper shows up and says, here's what we're trying to do, versus a giant industry lobbying group. So get involved. And financialdataexchange.org is another way to get involved.
Last plug. Thank you so much. Can I please have a round of applause for my amazing panelists?